Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we're going to discuss an important economic perspective that has recently been highlighted by financial experts analyzing Iraq's economic structure, particularly in relation to global oil prices and their potential impact on the Iraqi economy. As many viewers already know, Iraq is one of the world's most oil-dependent economies. Oil revenues represent the overwhelming majority of the country's government income, and fluctuations in global energy prices can significantly influence Iraq's fiscal stability, public spending capacity, and broader economic outlook. Recently, an economic expert provided insight into the current environment of relatively high oil prices and explained why this situation is generally considered beneficial for Iraq's financial position. At the same time, the expert also emphasized that these higher oil prices are not expected to create major pressure on local consumption inside Iraq. This distinction is important because it helps clarify how oil price movements influence different parts of the economy. To understand the significance of this analysis, we first need to look at the structure of Iraq's economy. Iraq's government budget relies heavily on oil exports. In many years, more than 90% of the country's public revenue has been derived from oil sales. Because of this heavy dependence, the global price of crude oil directly affects how much income the Iraqi government receives each month. When oil prices rise in international markets, Iraq earns more revenue for every barrel it exports. This means the government collects higher income without necessarily increasing production. For a country that exports millions of barrels per day, even a small increase in the price per barrel can translate into billions of additional dollars flowing into the national budget. According to the expert's explanation, this increase in oil revenue can create several positive effects for Iraq's financial system. Higher oil prices allow the government to strengthen its fiscal position, potentially reduce budget deficits, and expand funding for public projects and social programs. It also provides more flexibility for policymakers who are managing economic reforms and modernization efforts within the financial sector. One of the most immediate benefits of higher oil prices is the improvement in government liquidity. With stronger revenue inflows, the Iraqi government is better able to pay salaries for public sector workers, fund infrastructure development, and maintain key services. In a country where a large portion of the workforce is connected to government employment, either directly or indirectly, stable public spending plays a major role in maintaining economic stability. Additionally, stronger oil revenues help Iraq maintain its foreign currency reserves. These reserves are extremely important because they support the country's exchange rate stability and strengthen the ability of the central bank to manage monetary policy. When oil income rises, more foreign currency flows into the economy through export payments. This increases the country's financial buffers and improves confidence in the overall economic system. For followers of the Iraqi Dinar, this point is particularly relevant. Stronger foreign currency reserves provide the central bank with more tools to maintain stability in the exchange rate system. While exchange rate policy is influenced by many different factors, healthy reserves generally contribute to a more stable financial environment. However, the expert also made an important clarification regarding domestic consumption. Many people assume that higher oil prices automatically lead to higher costs for consumers inside oil-producing countries. But in Iraq's case, the situation is somewhat different due to the structure of the domestic market and government policies. The expert explained that high global oil prices are unlikely to significantly affect local consumption within Iraq. This is primarily because fuel prices and certain energy-related costs are often managed through government policies and subsidy mechanisms. As a result, changes in global oil prices do not always pass directly through to everyday consumer prices inside the country. This means that while Iraq benefits from higher export revenues when oil prices rise, local households may not experience the same level of price increases that consumers in oil-importing countries often face. In many oil-importing economies, rising global energy prices can quickly lead to higher transportation costs, increased electricity prices, and broader inflation across consumer goods. But Iraq's domestic system can cushion some of those impacts. This dynamic creates an interesting economic balance. On one hand, the country benefits from stronger revenue when oil prices are high. On the other hand, domestic consumers are somewhat shielded from the full impact of those global price increases. The result can be a period of improved fiscal strength without immediate pressure on household purchasing power. From a macroeconomic perspective, this situation can support economic stability in the short term. When government revenues are strong and domestic consumption remains stable, economic activity tends to remain steady. Public sector salaries continue to circulate within the economy, infrastructure spending supports employment, and consumer confidence can remain relatively stable. However, economists often emphasize that reliance on oil revenues also carries long-term risks. While high oil prices can provide temporary financial relief, they do not eliminate the structural challenges associated with an oil-dependent economy. Global oil markets are historically volatile, and prices can change significantly depending on geopolitical events, supply conditions, and global economic growth. For Iraq, this means that periods of high oil prices should ideally be used as opportunities to strengthen economic diversification and reform. Many economic analysts have consistently argued that Iraq's long-term stability will depend on developing non-oil sectors such as agriculture, manufacturing, tourism, and technology. Diversification can help reduce the country's exposure to external shocks in the oil market. When government revenue depends almost entirely on one commodity, fluctuations in that commodity's price can create sudden budget deficits or economic instability. Expanding other sectors of the economy can create additional sources of income and employment. At the same time, higher oil revenues can support improvements in the financial system itself. Over the past several years, Iraq has been working on reforms aimed at modernizing its banking sector, improving transparency, and strengthening regulatory frameworks. Increased fiscal resources can help support these reforms by providing funding for modernization projects and institutional capacity building. For followers of the Iraqi Dinar, these broader economic developments are often closely monitored. Exchange rate stability, fiscal discipline, and banking sector reforms are all factors that contribute to long-term confidence in a country's currency. While oil prices alone do not determine the value or future trajectory of a currency, strong export revenues can provide an important foundation for macroeconomic stability. Another aspect worth considering is how high oil prices influence investor perception. When international investors evaluate emerging markets, they often look at indicators such as government revenue stability, foreign reserves, and fiscal balance. Higher oil prices can improve these indicators for oil exporting countries like Iraq. Improved fiscal indicators can make it easier for governments to finance development projects, attract foreign investment, and participate in international financial markets. Over time, stronger financial credibility can support broader economic integration with global markets. However, economists also caution that relying solely on oil windfalls without implementing structural reforms can lead to missed opportunities. Many resource-rich countries have faced challenges when oil prices decline after periods of high revenue. Without diversified economic foundations, governments can struggle to maintain spending levels during downturns. For Iraq, the key question is how effectively current oil revenue advantages are used to support long-term economic transformation. Investments in infrastructure, education, technology, and private sector development can help build a more balanced economy that is less dependent on oil cycles. In the context of local consumption, maintaining price stability is also an important factor for economic confidence. If households feel that their purchasing power is stable and that essential goods remain affordable, consumer spending can continue to support domestic economic activity. Stable consumption patterns are particularly important in economies where government spending plays a central role in circulating income. Public sector wages, pension payments, and government-funded projects often create ripple effects throughout the broader economy. The expert's analysis essentially highlights that the current environment of higher oil prices offers Iraq a favorable financial window. The country benefits from stronger export revenues, improved fiscal flexibility, and enhanced foreign currency inflows. At the same time, domestic consumers are not expected to experience significant negative pressure from those price increases due to local economic structures and policy mechanisms. For observers following Iraqi economic developments, this perspective reinforces the idea that oil market conditions remain one of the most influential external factors affecting Iraq's financial outlook. While many other elements such as political stability, economic reform, and global market conditions also play roles, oil revenues continue to serve as the backbone of the national budget. Looking ahead, analysts will likely continue monitoring several key indicators. These include global oil price trends, Iraq's export volumes, government spending patterns, and the progress of financial sector reforms. Together, these factors will help determine how effectively the country can translate oil income into long-term economic stability. In the short term, stronger oil prices generally provide a cushion that helps governments manage fiscal obligations and maintain economic confidence. In the long term, the real challenge lies in using that financial strength to build a more diversified and resilient economic system. For followers of the Iraqi dinar, understanding these broader economic dynamics is essential. Currency stability and financial reforms are often closely linked to the overall health of the economy. Developments in oil markets, fiscal policy, and structural reform efforts all contribute to the larger economic picture. Ultimately, the expert's explanation serves as a reminder that high oil prices can create meaningful advantages for Iraq's financial position while not necessarily creating direct pressure on domestic consumption. This combination can provide a period of relative economic stability, but long-term success will depend on how effectively Iraq continues to strengthen and diversify its economy. If you want to stay informed with responsible and factual updates about Iraq's economy and the Iraqi dinar, make sure to subscribe to the channel and like the video. And as always, remember that this content is provided for informational purposes only and should not be considered financial or investment advice.